Mode.
Hey everybody, I hope you're well today. It's good to see you. Thanks for coming. My name is Jeff Gibby. You can see Steve Bigalow right here, maybe. I'm just getting we're also going to be simulcasting this to YouTube. So I'm just waiting to get a confirmation from the control room behind me that everything's going, and then I'm going to read you an exciting. Okay, great. Hello everybody, hope you're doing well. My name is Jeff Gibby with Metastock. Right here, you can see it. I'm going to read a legal disclaimer and introduce you to one of my favorite guests. Thanks for coming today. It's good to see you. So let's do it. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock should have no liability for any investments decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So you guys should all be able to hear me now. I hope you're doing well. If you're watching us on YouTube, welcome. Make sure to like, subscribe, say hi. It really helps us with the YouTube algorithm, and we really appreciate it. So make sure to do all that cool stuff. Today's guest, as you can see, is Steve Bigalow. I think it's going to be this way. He's a good friend of mine. We've been traveling the country for a number of years. Well, not lately, but we've done a lot of traveling together. He's been one of our most prolific experts. I love Steve. I love the way he talks about things, the way he teaches about the markets. And I have to say, out of the people that we've worked with over the years, he's definitely been one of those people that I've just learned the most from. And I love the way he combines candlestick patterns with trend analysis in a way that's easy to understand and logical. So that's your introduction, Steve. Let's get you the screen share and make sure we can see your screen, and we'll let you go.
Okay.
Make you the presenter.
Show my screen. Okay, we do this. Show screen.
Okay.
And I think it's...
I can see your desktop right now. And I can see the correct screen now. So
okay, good.
You look great.
First time. That's a
do you remember how to open up the questions tab? I know you like to be able
I do. I've got it right here in front of me. So, okay.
Well, then my job is complete for a minute. It's your turn. Go.
All right. Well, welcome, everybody. The reason we're doing this session with Metastock tonight is because they've got a great scanning software.
Uh-oh. Shit. I lost your audio, Steve. There.
Unmuted.
Okay, well, I'm unmuted. All right, so Jeff and I have been working together for quite a few years. I can't even imagine how many years it's been. But we are going to be doing a special training, which Jeff will go into, because I've discovered that even in our own chat room, in the Candlestick forum, we still have people asking about signals that they should have known by now. I tell people that the 12 major signals is all you have to learn in candlestick analysis. Let me see if I've got that on here. One of the dojis is one, but here are your 12 major signals. And the reason I'm kind of stressing this is I've been seeing on the internet recently all sorts of videos on different candlestick signals. For example, there was a 59-minute video on the 3 white soldiers that whoever was doing the video or the training showed how good it was. But then they also illustrated that over the last 7 years, they've only found 23 of those signals. And I'm thinking they just spent an hour of people's time learning something that they don't need to learn because they don't occur. A lot of the signals out of the 50 or 60 signals and patterns don't occur often enough to spend a lot of mental time and energy concentrating on the 50 or 60. You've just learned the 12. Plus, whoops. When you understand what the signals are telling you, now you've got a tremendous advantage for knowing what price movements are going to do based upon what the results of these signals are. So the doji is the most prolific one, where you can see that it's an indecisive trading. They open and close right at the same level. And the spinning top is almost the same thing. I say almost because the body's a little bit bigger and it looks like a spinning top. And so when you learn some of these rules, like the simple doji rule, which is the price will usually move in the direction of how they open after a doji. So here's what the logic is when you see a doji, especially in the overbought condition. And I'm going to go right through the basics of what you see on this chart. My overbought and oversold is stochastics of 1233. So the logic that the Japanese rice traders illustrate for us is, if you see a candlestick reversal signal in an overbought condition, get ready for a bearish reversal. If you see a candlestick buy signal in the oversold condition, get ready for a bullish reversal. Just very simple logic. And then we've got some additional factors that allow us to get much better probabilities when it's time to take profits or when it's time to go short. So on my charts, you're going to see the 50-day simple moving average. Well, not on this chart, but there's a red, which is the 200-day simple moving average, and the T line, which we'll go into here in a minute. But again, you can see a big reversal signal in the overbought area, way up above the T line. If you see an evening star signal right here at a major moving average and closing back below the T line, these are things that tell you you've got extremely high probabilities that the reversal has occurred. The evening star signal is a very simple 3-day, symmetric reversal. A big bullish candle, a day of indecision, and the third candle has a simple rule. It needs to close more than halfway down that first big bullish candle. Now you add the fact that it did it right here at the 50 and it closed below the T line. You've got extremely strong probabilities that you don't want to be in this trade anymore, and you can start going short. This is what I say, observe the obvious. If a doji tells you there's indecision going on between the bulls and the bears in the overbought condition, and you can see that it hit exactly at a level that everybody else is watching, that gives you extremely high probabilities it's time to get out of that trade or get ready to go short. Now, the reason we have the 50 and the 200 on our chart is that every major money manager around the world uses those moving averages to make their decisions about their portfolio. A lot of people say, well, why don't you use the 50 exponential or the 200 exponential? Don't they work better? We're not using them to make our decisions. We're using them to see what everybody else's decisions are. They're using the 50 and the 200 simple. We want to see what they're doing at those levels. What about the J hook and fry pan bottom? Not on list. Oh, did I not show the it'll be on the list. And again, that's what our training this Saturday is going to be all about, is what are the signals and patterns that you can utilize. Very simple. And I should have added on here before we started, if you've got questions, feel free to ask anytime. I'll try to answer them as fast as I can. So this is what we're looking for. A candlestick reversal signal in the oversold area, away from the T line. This is what we call your best friend. First of all, you've got a bullish Harami doji, which tells you the selling has stopped. Then they gap it up the next day. Not only tells you the selling has stopped, but they've come back in with great enthusiasm. Just recognizing that signal or pattern allows you to take profits at the appropriate time and then get into a new bullish trade at the appropriate time. So this is what we call 2+2 analysis. This is a bullish left-right combo. That's a bullish engulfing signal following a doji. And that's a very strong reversal signal. And again, the 2+2 analysis is, look what we're witnessing right smack dab on a support level that everybody else would be watching. a strong reversal signal in the oversold area, off the 50, closing above the T line. So essentially what we're looking at is the visual recognition of high probability trade setups. Now, I always tell people, if you don't leave here with anything but this analysis, the T line. The T line is the 8 exponential moving average. It acts like a Fibonacci characteristic. It acts like a natural support and resistance level of human nature. The reason I point this out is I was the worst investor in the world before candlesticks came along. Then when candlesticks came along, I started making money. And then when we applied the T line, which was one of my first private training students, Rick Sadler, said, take a look at the 8 exponential moving average. There's a very strong correlation that if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. Now, the reason that was relevant was sometimes you're going to see a candlestick sell signal, but if it doesn't confirm by going below the T line, you stay long. Now, it used to be I would close this out and say, all right, if this turns around and heads back up, I'll buy it back. But I never did because I usually took that money and went someplace else. This keeps me from getting whipsawed, number one, and keeps my emotions out of my trading. And my emotions are, like most other people, that I was just happier than a pig in doo-doo if I could ever even make a profit on a trade, let alone a big profit. So what's the normal reaction of most investors? Oh boy, I've got a good profit, and boy, would I look stupid if I let this turn around and turn into a loss. I better take a profit just because I have a profit. That, the candlestick analysis combination of a candlestick buy signal and a close above the T line keeps you in that trade until you see when it's time to come out. Same scenario on the bearish side. If you see a candlestick sell signal and a close below the T line, you can stay short until you see that candlestick buy signal and close back up above the T line. So this is the truism that you want to maintain. If you see a candlestick sell signal and a close below the T line, there's an extremely high probability the downtrend is being confirmed, which means if I've got a good profitable trade and it keeps going up, but as soon as I see that sell signal close below the T line, I know the probabilities have gone against me. Same scenario on the buy side. If I see a candlestick buy signal to close above the T line, I know I've got an extremely high, and I stress the word extremely, high probability that uptrend's in progress. Or on the other side of the coin, if I had been short and I see a candlestick buy signal or close above the T line, I definitely want to be taking profits. So what we're going to be doing is illustrating what are the strongest signals and patterns. I mean, the 12 major signals are already kind of cultivated to being the strongest signals and patterns, or signals anyways. And the reason we want to learn those versus the others is the others don't occur often enough to spend mental time and energy trying to learn those. What we want to learn is which ones have the highest profitability factor. So anytime I see a best friend signal, that's a doji followed by a gap up. The reason we call it your best friend is it's got 3 vital factors to it. 1, the probability of an uptrend is extremely strong. 2, the magnitude of that uptrend is usually very strong. And 3, the frequency of this signal occurring is quite high. So you've always got a constant supply of very good, strong reversal trades using the best friend signal. So you can enhance that. Right now we're long WTI. We recommended this a while ago because it's an oil, not because it was an oil stock, but look what's happened right here. This is your morning star signal. in the oversold area. And notice where it bounced, right smack dab off the 200-day moving average, which means everybody was waiting to see if it was going to bounce off the 200-day moving average. That's when they started buying. What it did for us is visually we could see that's where they started buying. This made for a high probability trade setup. Also, if you look at other stocks in that sector, there's about 5 different, that's for the market. There's things where you can enhance the probabilities that you're in a correct trade. 1, the strength of the candlestick signal. 2, where you're occurring as far as your overbought or oversold condition. 3, if it's doing it at a level that everybody else is watching. And 4, if it gets up through the T line, just high probabilities that you're now in an uptrend. How long do you hold on to this position? Until you see a sell signal and a close back below the T line. All right, so that's kind of what we're going to be doing. I'm going to go to some live charts right now, mainly because my computer screwed up tonight and I was going to try to get everything on the PowerPoints. But let me see if I do this. That's what we're looking at. Okay, so here's kind of the logic that we can use using candlestick analysis and the charts. I always tell people prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And candlesticks are essentially the graphics of investor sentiment, telling you what's going on in price movements. Oh, I don't know what that was, Jeff. Things were beeping. Was that me?
I don't think everything is looking good on this side, Steve.
Okay, I heard the beeping. Did you wait until cross T line, or did you wait until crossed T line or bounce off the 50? No, the number one criteria for any decision is the signal itself. What happened there? This was the signal. You could start buying. And what we're going to be showing people too is that the truism of candlestick analysis is you can stay long until you see a candlestick sell signal and a close back below the T line, with the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So look how far away we've moved from the T line. Now you have the enhancement of a morning star signal bouncing smack dab off the 200-day moving average. Where would your first likely target be? The T line. And then you kind of hold on to it. Now, if this had opened here or closed here, the next day it closed down here, what'd that tell us about the T line? They took it up to the T line, bounced. They're not going anywhere. Ooh, that's what I wanted to show. I'm going to get a little bit off track here. So anyways, this becomes a high probability reason to buy. You don't have to wait for it to go through any specific moving averages, except if this is your buy signal, obviously you're watching to see what's happening at these levels. So had this done a bearish signal here, I would have closed out the trade because that told us they weren't coming up above the T line. Now, this is what I wanted to kind of illustrate, was there is a difference between a signal and a non-signal. This is the Dow. Up here we had a bearish Harami, doji, in the overbought condition, right at the 200-day moving average that everybody else was watching. And remember our doji rule. The price will usually move in the direction of how they open after a doji. Next day, they took it down. That was a pretty good indication they were rolling it over. But what was the final confirmation or the real confirmation that the market was heading down? Notice how they gapped down below the T line and traded lower. We had a little pop here. Now I say a little pop because this is kind of splitting hairs. But remember, the Japanese rice traders have illustrated to us what a signal, reversal signal was. This one was not a reversal signal. This actually opened slightly above the previous day's close. Had it opened lower and headed up, that would have been a bullish engulfing signal. So notice when it popped back up with not a complete reversal signal, it failed at the first major resistance level. In this case, I think the CPI was bigger than everybody expected. But there's one of our major signals. There's a kicker signal. What did that imply? Well, we're back below the T line with a kicker signal. We're in a downtrend. What type of pattern did it set up? There's our bearish J-hook pattern. So I wanted to point that out, that this was a signal. This was a signal. This is not a signal. We always get questions, well, isn't that bullish? They traded up strong. The answer is yes, but the rationale has to be that if the Japanese rice traders have had 400 years to analyze reversal signals, and they don't mention anything about this type of move, then they're telling us that this isn't a reversal signal. So what's the implication? It might pop up, but it's not going to have the same magnitude of strength as if it had been a bullish reversal signal. So that's why we've been a little bit cautious that when we covered short positions, we aren't necessarily buying long just yet until we see what this market is telling us. Same scenario over here on the NASDAQ. Not a reversal signal. So we're going to be a little bit cautious until either they back it off, and then what do we have as far as our patterns? There's a bearish J-hook pattern. Wave 1, wave 2, wave 3. If this rolls over, what do we have going on? Wave 1, wave 2, wave 3 to the downside. So does that mean every stock we want to look at is going to be bearish? No, we've got recommendations out that we put on recently because there is a bullish engulfing signal in Manu. But now we've hit this level. That might mean even though we were buying here, we might want to be taking profits. I'm going to go through some of these real quick. Etsy, for example. Whoops, this is not what I want to do. There we go. There's your bullish flutter kicker signal, one of your strongest reversal signals. Why do we call it a bullish flutter kicker signal? Because this is a very effective reversal signal. A dark candle. The next day they gap up above the previous day's open, but in this case they do a doji. Now what is our alert? The fact that we're in the oversold area and they gapped it up. Now what's our doji rule? If it opens and starts trading positive, it's likely going to trade positive. So why do we call this a bullish flutter kicker signal? Because if you took out this little flutter, you basically have a kicker signal. The advantage to this is that you can see when it's setting up, you're prepared for it. Whereas on a lot of kicker signals, it may just be doing a kicker and you have to identify it or see it as it's happening to get into it. There was a bullish flutter kicker in Sky, started the uptrend. We recommended this one today because there's your inverted hammer. Again, one of the 12 major signals. And this is from my own statistical analysis of using candlesticks for the last 30 years. If you see an inverted hammer, and the ultimate inverted hammer is your gravestone doji. So it's got two basic rules. One is because it's a doji opening positive, but two, the inverted hammer has a statistic that puts me in this trade anytime I see bullish trading after an inverted hammer. The statistic is if you see an inverted hammer in the oversold area and it trades positive the next day, you've got about a 95% chance or greater that it's going to trade positive. So notice we had that reversal, and then there's your best friend signal gapping up. That implies a lot of strength coming into this. So what we can visually identify is which signals and patterns are going to produce very strong price moves. So this will be available on YouTube once it's recorded. Yeah, they will get you a recording.
We'll send it within an hour, Steve.
Okay, all right. And I get same scenario on this one, NOVT. Look at your indecisive trading. Just a simple visual analysis. If one doji means indecision, a whole bunch of dojis means greater indecision. Look for a price move to the upside. And one of the advantages of our chat room is that it allows about hundreds of sets of eyes looking all for the same signals and patterns, that we know that this is your best friend breakout. There's your consolidation. There's your J-hook pattern. Essentially what the charts will tell us is where is the interest coming into specific stocks or sectors. That allows you to, instead of just sitting in a stock that might just have a very slow uptrend, we're identifying the ones where all of a sudden a new strong bullish interest is coming into to an area. So for example, we already recognize the oil stocks are getting strength, and another confirmation that the oil stocks are probably picking up is if you go to the crude oil chart. You can see there was a support level down here, and then you started seeing buy signals. So the logic is if you can see that a commodity, whether it's silver or like for example, if the silver chart is acting strong, then you want to take a look at the silver stocks. Does a hanging man in the overbought area have the same meaning as an inverted hammer in the oversold area? Yes. So there's a very, when you see a hanging man, how to find one? Let's say hanging man. If you see a hanging man in the overbought area, very simple rule. If it opens lower the next day, you start taking profits. If you see an inverted hammer in the oversold area and it opens positive the next day, you can be buying immediately. My stochastics are 12-3-3, and that was done very scientifically. I sat in my living room at my desk 30 years ago, and the norm at that time was stochastics of 14.55, but I'm a swing trader. My trades usually last anywhere from 2 to 10 trading days. I needed something a little bit quicker, so I just sat there and just kept tweaking. 14.53, 14.33, 12.54, all sorts of numbers until I found the numbers that kind of essentially showed you exactly where the tops and the bottoms were. And 12.33 has worked effectively. So there's nothing set in stone. It just works well for me. So the way I learned candlestick analysis was logic says if we're in the oversold area and this was the bottom, was there a reversal signal? Well, what's that? Well, that was a morning star signal. So I learned morning star signal. In the overbought area, what was that? Well, there was your evening star signal. There's your J-hook. There's your kicker signal. So again, out of the 50 or 60 signals, I kept looking and saying, finding the ones that were, or found the 12 that seemed to be occurring over and over. The rest of them didn't seem to occur often enough to even pay attention to. And that's how I devised or cultivated down to the 12 major signals. So here's the enhancement. If we can see that ENPH is rolling over and it's pulled back, this is what we call the blue ice failure. This was named by my late friend Dave Elliott of Wall Street Teachers, and he described a blue ice failure as somebody falling through the ice. They come up to try to find the hole they fell through. They can't find it. They drown, so they go to the bottom of the pond, which is essentially a more defined bearish J-hook pattern. So you can see how it failed right here at the 50. And then it broke this level, and today it did a doji. So what would be our entry strategy? If it opens lower, what pattern do we have setting up? A bearish doji sandwich. And we know the bearish doji sandwich has the first part and the third part usually about equal. So this not only makes for a good short, but even if you're day trading, it makes for a very good pattern setup. And if it does do a bearish doji sandwich, we know that the bearish doji sandwich or the bullish doji sandwich says there's going to be a continuation of that trend. So if this did another big down day, now what becomes our target again? The bottom of the pond, the next support level. So all this is merely identifying the information that the Japanese rice traders have provided for us as far as signals and patterns. Sedge, wave 1, wave 2, and how did the bearish J-hook pattern confirm on wave 3? Well, there's your bearish best friend signal, doji gap down, that failed at the T-line, that failed to hold up this level. So what do we do if it opens weaker tomorrow? We start shorting, because what's our anticipation? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. Kind of the same scenario on Roku. If you'd been short, you would have covered here. Now look what it did. And here's one of the observations that we teach quite often, is if you're in an uptrend and the next day they have enough selling pressure to gap down below the previous day's open, if you're long, you close it out immediately, because that's exactly what you shouldn't be seeing if the bullish sentiment is going in this direction. Now what do we got setting up? Well, they haven't been able to get back up above the T-line. So if this starts trading lower, what's our anticipation? Wave 1, wave 2, bearish J-hook, wave 3. So there's a lot of times where you can see the bearish kicker signal, failure at the 50. Wave 1, wave 2, wave 3. Now look what it's doing. There's your bearish, there's your bearish flutter kicker signal. If this opens lower, what can we anticipate now? Wave 1, wave 2, failure at the T-line, wave 3. Essentially, recognizing the patterns and the signals that are instigating those patterns just produce extremely high probabilities you're going to be in the right place at the right time. So Carvana was one of those. Wave 1, wave 2, wave 3. Now look what's happened. Popped up, and there's your probability factor. They haven't been able to close this above the T-line. What's that tell us? We're still in a downtrend. And if they start selling this off, now what can we anticipate? Wave 1, wave 2, going into wave 3. So here's that same pattern setup. And this is why the T line is so, what do I say? So effective for telling you whether the bullish or bearish sentiment is in control. And you can also see the pattern setting up, wave 3. How do you determine where start counting? You don't have to be that exact. Wave 1 and wave 3 are usually going to be about the same magnitude. Now, does it have to be the exact same magnitude? No. What's the most important factor? This starts down. How long do we hold this? Until we see a buy signal. It's time to cover your short positions. So it doesn't matter whether you're trading a $2 stock or a $200 stock. You can see what's happening in IBM. There's your bullish Harami telling you the selling had stopped. There's your evening star signal telling you, I've also got the 34 EMA on my chart because it works relatively effectively. And a lot of people ask, well, why do you have this number of moving averages and that sort of thing on your chart? The nice thing about candlestick analysis is you could take everything off this chart and just use the signals and patterns to illustrate what's going on in investor sentiment. Anything that you add should be something that is confirming the signals and patterns. So if somebody says, put the XYZ indicator on your chart, you put it on, it doesn't seem to help, take it back off. Because what's the most important factor? The candlesticks buy signals and sell signals. So anyways, that's essentially what we're going to be doing, and I'll let Jeff further explain it. But the bread and butter, or the bricks and mortar of candlestick analysis, is what are the signals and patterns illustrating. Everything else is merely a confirming indicator. Is there anything that would make you increase to your position? Is there anything that would make you increase your position? Jenny, I'm sorry. I have a very simple trading, I guess, program. What is the thing that kills most investors? Our own emotions. So I, through the years, have had to do things that would keep my stupid emotions out of my trading. And one of those is, when we put on a position, we think, oh man, this is going to be a good one. But if I've got a portfolio size, and let's say it's a $250,000 portfolio, I already pre-established that I'm going to put 10 equal dollar amount positions on. The reason for that is, if I have become accustomed to putting a $25,000 position on, it becomes a unit of my portfolio. If I tell myself, oh boy, this looks fantastic, instead of my normal 25,000, I'm going to put 45,000 in this trade. You can bet dime to donuts that you're going to spend 90% of your time watching that big trade versus the rest of your trades. And if it doesn't work like it should, our own emotion said, well, I analyzed that this was going to work. I'll give it another day or two, and it doesn't work. Now you're getting out of the trade much lower than what you should have been, instead of looking at that and saying, well, this unit's not working, let's close out the position. So I don't know whether I answered. Oh, so I don't add to my position. Now I will if I'm trading option positions. For example, we have put spreads on Carvana that we put on up in this area. And now it's looking like it's rolling over again. I might add to that, add more put spreads. They might not be the same execution price or strike prices. I might go out another week or two and add another. Carl, the T-line is the 8 exponential moving average. And I tell people you don't have to take my word for it. If you put it on your chart, just see how effective it works. And when I say effective, you'll be surprised at how often they open right on the T-line or they move right up to the T-line and then fail. Now, the reason that shows why this is a natural support and resistance level of human nature is nobody has the T-line on their chart. So it's not like everybody's sitting there saying, oh, I'm going to wait to see what it does at the T-line, because nobody has it. What we've discovered is it does act like a natural support and resistance level, becomes an additional factor. So I always make that on that screen where I show the T-line, I always kind of state as that being the most strongest point of candlestick analysis. If the candlestick signals are the graphic depiction of investor sentiment showing where everybody is buying and selling, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely powerful, accurate trend indicator. Do you ever use Fibonacci lines? John, I don't use them as a primary indicator. If I think something is heading down, I might throw the Fibonacci numbers on, not to see where it's going, but seeing where the buying might be occurring at one of those lines, which would tell me, oops, this is where they are buying. Same thing with Bollinger Bands. As you can see, my charts are relatively simple, but if I see something changing, maybe I throw the Fibonacci's to see how far it might pull back, or the Bollinger Bands, or anything else that's going to tell me where a pullback might be occurring, and seeing the confirmation of that pullback ending would be if it kind of confirmed or conformed with something that everybody else is watching. Have you tried 5 EMA typically +2 instead of 8? Michael, it doesn't matter. Use whatever you think would enhance the probabilities that you're seeing the reversal at a specific level. Throw it on there. A lot of people say, why don't you use RSI instead of stochastics? Because stochastics work very well for me. If you think RSI works, worst case scenarios, throw it right on top of your stochastic chart. See which ones work better. The major factor of the effectiveness of candlestick signals are the signals themselves. Anything else you add is merely something that will add additional confirmation that that reversal signal is working. Okay, I guess that's about all I got. Jeff, you want to take it from here?
Only if I can find the unmute button, Steve. All right. Thanks again, Steve. That was great. Good to see you. Appreciate you coming in here and spending some time with us. Very, very much appreciate that. Let me go ahead and share my screen right here. And we'll just kind of talk a little bit about the class you're going to do. And I do have to say, I'm very excited about it. So let's go ahead and kind of hold on just a second. Still making a few changes here. And let's kind of talk. On Saturday, coming up, the day after tomorrow, we're going to do a candlestick training boot camp with Steve. So if you liked what you had to say today, or what he had to say today, you're going to love Saturday. In this 6+ hour session, he's going to talk about market trend analysis, identifying the most robust candlestick trade setups, successful trade entries, when to immediately close a trade, confirming indicators, what indicators to use, when to stay in a trade, and when to take profits. And in addition to that, he's going to cover the 12 major signals, how they work effectively, analyzing high profit pattern moves, where to put in stop losses. That's such an important thing about kind of trading. Is like, where do you take a stop loss? So if you're wrong, where do you want to take the stop loss? And actually, those techniques that Steve has taught me are the ones that I use. So, and what confirming indicators you should use to dramatically improve the trend reversals. So, Steve, as I said earlier, is one of the most prolific people that I've learned so much from him. And he actually contacted us about a month ago and said, hey, I have this training course. And it was his idea to set it up, and I was all over it. Let's do it. So we're going to do this 6-hour class. It's going to be the day after tomorrow. I'm going to attend, have my notebook. I'm going to take notes. And you'll want to do the same thing. I really, really hope you can join us. So this is going to be 6 hours of live trading. It's going to be the day after tomorrow, October 8th at 10 a.m. Eastern time. Okay. As part of the purchase, if you sign up for this, you're going to get access to the recorded sessions. Those will be available almost immediately after the event, and they'll be available permanently to you on our website. So 6 hours of live trading, October 8th, 10 a.m. Eastern time, and access to all the recording. Normally, this particular training class is $899. Here at the webinar today, it's going to be $499 as part of the webinar special. So we're going $449. Did I say $499? $449 today. So you can sign up for just the training. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. The other thing I want to talk about too, because every time we talk about Steve, I'm so proud of the product that we put together with CPS 2.0, which is Steve Bigelow's Candle Profit Systems 2 for Metastock. With it, it's one of our most popular add-ons that we've released. It will identify on a chart and kind of allow you to kind of see all the patterns that Steve talks about. And I'm really actually very, very proud of it. When we initially put it together, I sent it over to Stocks and Commodities. We were working with a gentleman by the name of Dennis Peterson, and he gave it a very, very solid review. A few years later, I sent it over to the second version over to Barbara Starr, another good friend of mine, a reviewer at Stocks and Commodities, and she absolutely loved the second version. With the CPS, or the Candle Profit Systems add-on for Metastock, it's going to be able to identify on a chart all of these patterns: the fry pan, the bullish and bearish belt holds. I'm going to read all these patterns. In total, there's about 31 total patterns. I believe it's the total count, and you can kind of read them here. It includes the doji best friend, which the doji at the top. Steve talked about those today. The doji bears, the doji bulls, the muffin sandwiches, the doji sandwiches. Those patterns just make me hungry, but they're also really good trading patterns as well. So those are all identified on the chart, and because they're identified, you can actually do scans for them, which I'm going to talk just a little bit about. In addition to those multiple day patterns, you get some single bar setups, including doji, the bullish engulfing, the bearish engulfing, and you can see that complete list here. Okay, I want to just kind of point this out to you in terms of what it actually looks like on a chart. So when you actually kind of get this and installed on the chart, you're going to notice that all of the patterns are going to be identified. Here you've got an engulfing bearish, you've got a shooting star, here you've got a fry pan bottom, a doji. In addition to identifying them on the chart, it's also going to tell you, you'll notice right here, there's a commentary. It's going to explain the pattern to you in English. This is what we're looking for. So for example, if you're looking at the doji best friend, it's going to say it's a doji, which is, as Steve said earlier, an indecisive move, followed by a gap up, an indecision, followed by a decision, one of Steve's favorite patterns. All those patterns that kind of are on that spreadsheet, or on kind of that thing the sheet that I showed you, all of these patterns are going to basically have that English definition. They're going to include things that you should look for with them, and also enhancements, things to watch for, so that when you run explorations, they're going to kind of give you a better idea of what's going on. So that's all included. of course, with Metastock, because we're identifying this, you use one of my favorite things in Metastock, which is the ability to do explorations. So any of those patterns you can just run a scan for. You can scan whatever you're interested in. So with the data that we offer with Metastock, we cover almost 200 different exchanges, including here in the US. We had a gentleman earlier from Australia watching from YouTube. We get a lot of Indian customers, although probably not with us today due to the time difference. But all kinds of different markets are available. Over 300 different exchanges. And you can, if you want to find a Doji best friend here in the US, or over in London, or over in India, or over in Australia, we're going to have those markets for you. So it's going to include 6 different explorations. You just decide the scans that you want to run. It'll run it for you. The expert advisor is going to label and identify those things on the chart for you. Basically, it's 36 different patterns. And also going to set up the charts exactly the way with the T-line and the 3T line and the moving averages and the stochastics. And all of those will be pre-configured for you. This actual add-on we normally retail for $499. It's worth every penny. Here at the webinar, we're going to give you a special of $399. We're going to give you a 30-day money-back evaluation period. So you can take a look at this if it's something that you like. Again, it's been one of our best-selling add-ons. It's been reviewed twice in Stocks and Commodities very favorably. And there's a reason that it's been rated so well, because it helps you identify Steve's patterns on the charts, and it also helps you identify them scanning against thousands of instruments. So $499 is the normal retail price for this, $399 here at the webinar, 30-day money-back guarantee. If you haven't used Metastock, I'll tell you, Metastock's actually been rated #1 in this price category 29 years straight. And that's just because, well, we keep getting voted #1 in the Reader's Choice Awards. Thank you for everybody that's used Metastock. I particularly like it for the scanning and the ability to go in and find, I love it. If I want to find a Doji best friend, I can eliminate all the stocks that don't have a Doji best friend and just focus on the 2 or 3 that actually have a trade for me. And I think that's the combination that you get with the Steve Bigalow add-on and the candle profit systems with Metastock. It's just such a great way to do it. So $399 money back guarantee. If you want to do both, the boot camp, I have duplicates on the sides here, and the CPS, we're going to do a kind of a package deal. So you can get the candle profit system #2. You can get the training boot camp that we're going to start. Again, that starts at 10 a.m. Eastern on Saturday. You can get a free month of our award-winning Metastock program, Zenith data to power it. We'll give you some free training to help you understand how to use Metastock. We'll actually even set up a one-on-one appointment with one of our support reps to kind of show you how to run the scans and how to kind of get around the program and how to utilize everything. So we call that our white glove installation support. Normally, if you just bought everything separately here, it costs about $13.98. The add-on itself is $4.99. The training is $4.49. If you want to do them together, $6.98 is the price that you'll pay today. So you can do that at 800-882-3040. You can sign up online at metastock.com/saleschat, or you can go to metastock.com/candlestickforumd to sign up for that as well. So actually, let me send that over to the chat room. I do see that we have a couple questions. Thank you, Mitan. Good to see you today. Let's see. Where did my chat board go? All right. Well, anyway, I'll type that link in there. Again, the phone number here is, or the link to do that on is metastock.com/candlestickforumd. That'll allow you to get this really special offer. You can give us a call at 800-882-3040. Or you can actually, if you have questions, if you want to get a little bit more information before you sign up, give us a chat at metastock.com/saleschat. I would encourage you to join up this. As I said earlier, I love Steve. I think he's done such a great job in terms of I've learned a lot from Steve, and if you can learn just a little bit from him on Saturday in a 6-hour class, it's well worth $698, and it's going to give you one of the best add-ons that we've got, the CPS 2.0. So sign up. If you have any questions, let us know. Steve, thank you very much for coming in today. I really appreciate all the time, all the work, all the stuff that you've done for us over the years. I really do appreciate that. And anyway, give us a call, 800-882-3040. Thank you for watching today. I hope you learned something. If you're watching the recording on YouTube, make sure to like and subscribe. It does help a great deal. Stay healthy, stay safe, stay well, and we'll see you at the next webinar. And hopefully I'll see you on Saturday at 10 a.m. Eastern to go to this class. I'm looking forward to it. See you then.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.